Hello and welcome to the networking floor of PTC'25 in Honolulu. I'm now joined by Alex Ramirez, Senior Managing Director for Guggenheim Partners. And Alex, it's a pleasure speaking to you. Couldn't think of a better location to speak to you.
I couldn't agree with you more.
How many PTCs have you got in your pocket at this stage?
I believe this is my sixth PTC.
Six, okay, so pre-COVID as well, yeah.
Oh, of course, yeah, no.
Well look, Alex, one thing that we don't need to come to PTC to learn about is the immense frenzy that there is in terms of financing investment within the digital infrastructure world. But here we just got the confirmation that it's really booming into the $1 trillion level. Do you think this is because there are real growth opportunities for investors, or are we entering a phase where there's a bit of a fear of missing out, of not being part of the snowball of just dropping capital and investing in building?
It's a great question.
I hope so.
From my perspective, AI is going to change our lives, and it is changing our lives. I think we're in the midst of a fourth industrial revolution. And I get really excited when I think about the benefits that this is going to bring to us and society more broadly. When I think about kind of the innovation around drugs and what this could mean to healthcare going forward, when I think about the efficiencies, right, no, exactly, or the efficiencies this is going to mean for businesses. I think this, sure, part of it is that we're very early days. This all happened very rapidly from a growth perspective, but I'm a believer, and I think I'm quite excited about what this means for us as a society.
I mean, a lot of people say that we are sitting in dry powder, so this is really going to explode at some point, in a good way, not in exploding in a bad way. But how can financial groups, so people that are putting their money into it, how can they differentiate from investing because there is that growth opportunity, because AI is going to deliver on good returns, from succumbing to pressure of having to be part of it? Again, so a bit of the FOMO fear, like how do you balance going with a versus going because everyone else is going? And we see that a lot with the tech giants, to be honest.
No, it's a good question. Look, what it comes down to is really understanding the businesses and the growth drivers, really spending time doing kind of effective diligence, and that's where we help out oftentimes, given the experiences we have in this industry. And there's all sorts of new entrants coming in this industry. There's also very experienced players. But I think if you do your homework, you can find some really nice returns in this industry and be part of what's going to be an industry that's going to continue to grow significantly for the foreseeable future.
Okay, and then I think timelines are also a big conversation topic, especially this year. And some of the people we already interviewed this morning, they brought that up quite often. Because people usually we talk about these things and we assume, I talk to you about 1 gigawatt campus. By tomorrow you're going to have built it. It's not a 24-hour job. It's a 5-7 year job to have that developed, let alone just secure powers and lands and all those sort of things. How does a company like Guggenheim, for example, navigate that? How do you navigate those 5-7 years from idea to cutting the ribbon at full build, not just phase 1, phase 2? Like, how do you manage that, the capital flow, the ROI, the community impact, like everything? How do you manage that?
Yeah, no, another good question. And so with our advisory work, the relationships we built are multi-year relationships, and these clients have been our clients for us for many years. And so we kind of are with them. In certain instances, I have certain clients, I was there at their infancy when they were tiny companies just starting with a whiteboard, and we helped them with that whiteboard, and now they're massive companies. So to us, this is not like a 5 or 7 year journey flip out, right? We're advising folks on how to build great sustainable businesses for the long term and continue to be that strategic advisor for them.
Yeah. I mean, you also already mentioned like new platforms coming into market, and you were talking now about the conducting line of being with them for a long ride.
Yeah.
How do you view consolidation in the market? Because there was a wave of it. It's kind of subsided down a little bit. The deals became bigger, but there's less people being acquired because there's less platforms to be acquired, hence new ones coming in. So is there a new consolidation wave coming? When do you think is it going to come? And I'll add one more aspect to it, valuations. What's important for a valuation of a data center company, of a digital infrastructure company today? What are the metrics that you look at? A lot in that, sorry.
No. It's all. These are all.
It's up in the schedule.
These are all important questions. So look, from a M&A perspective, I think you will continue to see consolidation in this industry. Look, various investors have made their bets and have their platforms, but there are still plenty of good businesses that need kind of the, the partnership with the right capital to continue scaling their businesses. And that could be from, a strategic acquiring a company, or various mergers where folks come together to continue to scale. So I think you're going to still see a very active M&A environment, and we've got a large pipeline for sure. Remind me what your other question was. Oh yeah, it was with respect to valuations. So look, on valuations, and we take a very, very kind of detailed approach to how we think about these valuation exercises. But look, quality of assets are so important, right? Just understanding, what is the legitimate growth potential of this business? How has this business performed historically? Why were they going to continue to perform going forward? So we spend a lot of time looking at businesses that produce long-term sustainable cash flows, steady set of cash flows, right? Which is what the beauty of this business, right? Oftentimes our clients are signing long-term contracts with some of the best customers that are out there. But really unpacking it and looking this on a contract by contract basis and really understanding, what these guys, these operators have signed, the kinds of contracts they've signed, the opportunities they have going forward, what kind of returns are they making? And so we look at that quite closely when we think about, okay, if a business is, for whatever reason, signing bad deals or spending too much, like those are signs that we can kind of pick up on pretty quickly. So we look for best-in-class operators, and those are the folks that we ultimately are marketing to new investors that are looking to deploy capital in the sector.
Okay. A bit of a side question on energy and sustainability, because some regions have more ahead in terms of renewable energy. The infrastructure just exists. So if you compare Europe to Asia, probably Europe has more than Asia does. Southeast Asia, that's Southeast Asia, because China's doing quite well at the front, I think. Do your metrics kind of change sustainability-wise depending on the region, or you just go with one approach on how you look into who's the biggest polluter or the less polluting?
We all would hope, and I think the customers would too, to have more sustainable infrastructure.
Yeah.
It's a tricky time though when the scale has happened so quickly, and some of these goals that folks had with respect to sustainability goals have actually been pushed out over years. And so sustainability is certainly something that goes into the equation when we think about geographies, because certain assets that are on the other end of the spectrum and aren't necessarily great for the environment, ultimately don't have as much interest from investors for obvious reasons.
Okay, and of course Guggenheim has, you cover the globe, so there's a lot of things happening. But we also live in a time of uncertainty. We have a new US government, they're literally going to government today. How do you kind of prepare for rapid changes, economic changes, rapid technological changes? And we saw this presentation this morning as well from Bill Barney that kind of pointed out that there's 2, 3, 4 factors that are kind of becoming similar to what happened in 2000, even though it does not mean that there's a recession coming. But what do you put in place to navigate that, to avoid the worst? What's the components of a deal, of a financing, of what you do to make it work in an environment like that?
Yeah. So look, we have, when you think about kind of the Guggenheim platform, I think of it in a few different factors that really help us continue to win business, right? Firstly, we're a trusted advisor. That's where it starts. And what we do that I think really differentiates us is that we have access to investors, whether it's sovereign, infrastructure, private equity, newer investors entering the space, real estate investors. And so we have been their advisors for many years and know how to kind of put them into the right platforms or help them sell their businesses. And part of it is our creativity on the financing side, which is, we're cutting edge around some of that stuff. So for one, it's just that history we have with our clients, so they trust us, and we're going to be together through good and bad times, right? Hopefully, exactly. And hopefully we continue, with the good. The other thing I would say is team, and we've made a massive investment in team. And so we have, you mentioned the globe, here in the US, we have, and it's all about having expertise and deep expertise and kind of across telecom and digital infrastructure. So whether it's data centers, towers, fiber infrastructure, the network service providers, this emerging class of GPU as a service. We have subject matter experts who have deep experience around these verticals, so clients trust us with this, right? Ultimately, like I said at the beginning, it's about trust, and when times are bad, for folks to trust you and provide the right advice. So I think those are some of the key factors. And then look, I think the other thing with respect to Guggenheim, we are the pioneers of structured finance, and in particular, the securitization industry, which is a big financing tool that many of our clients used. And so we kind of were there at the forefront of that industry. So again, it goes back to how we're different and how we help our clients and really kind of have that deep, long-term kind of relationship.
Absolutely. And I mean, you mentioned GPUs again, side question.
Yeah.
When you speak to clients and partners, are they worried about on how the GPU market is changing with all the barriers that are being set up between China, US, all those economics that are going on between the two countries that's affecting chip production? Are they worried? Have strategies been adapted? Are there contingency plans? What's the conversation on the chip level of this whole thing? Because that's the essence of making AI work.
Well look, right now, and you mentioned the $1 trillion number. There's $1 trillion worth of expense that's coming to fuel AI over the coming years. And today, the chips are it's primarily NVIDIA, right? And I think over time you're going to see more entrants in the market, but NVIDIA will be a big part of it. And I think when we talk about the $1 trillion worth of investment, what are we actually talking about? Because it's all happening so fast. But in reality, it's a few things, right? One of which it is with respect to just the transition, and you said it, from CPU to GPU, modernizing that technology so it can work for AI. In addition, it's about what we're seeing happen now is it's a new term. A couple of years ago didn't exist. AI factories are being built. And you talked about some of these, and these are massive deployments to efficiently house the AI infrastructure. And the last thing, a lot of what you've been seeing historically around AI expenditures has been related to testing. And now you're going to see, inference is going to be the move. But I think what sometimes is lost on folks is that that's quite complicated, and it's latency sensitive. And how that topography ultimately gets deployed, it's still TBD.
Yeah, and I guess this conversation for the next 2-3 years to really figure it out, and especially power consumption at the chip level. I think that's going to be the other aspect to this whole conversation around GPUs.
Absolutely.
But and I'm not going to take much more of your time because I know PTC, everyone is very busy. But what is Guggenheim's plan for 2024, 25, sorry, already over 24, 2025, 26? What are you guys planning? Regions that you're operating in? Are you going to be going in? Clients that are going to grow, diminish, acquisitions, consolidation? Tell us as much as you can, and with all the values to it.
No. So look, and I mentioned team and kind of the investment we've made into this vertical as a firm. London and our European kind of effort, which we've made a huge push into that world. That's going to continue to be a very interesting growth avenue for us, and we have a great kind of cross-border partnership with that team. The data center sector, we will continue to be an area where we're spending a ton of time, and that's going to come in the form of sales of companies, raising capital for folks, creatively structuring folks, bringing in recycling capital for, a lot of these guys have stabilized assets that you can bring more efficient capital against those assets. There's the structured finance component. All this is just ongoing. And you're also, that just happens to be so much of the capital spend is related to a data center, but then there's the other verticals as well. Is on the fiber side and how that fiber infrastructure is deployed across the US and around the world, right? And a lot of it we've seen, of course, the data centers help fuel that infrastructure, or the growth of that industry. The GPU too, right? The GPU service and some of the service providers that are helping, partnering with NVIDIA. So across the board, we're seeing all sorts of interesting opportunities for us.
It's all changing right before our eyes, and I think that's the beauty of this sector. There's never a dull day.
Right, and it goes back to the point that I made, which is like you have to really cover all aspects of telecom and digital with significant focus and deep understanding, because it evolves from one thing to the other. It's all interrelated, and also on the power side, we're spending a ton of time on the power side, understanding what's happening with nuclear, which it's still in the early phases, but in other forms of kind of power, how these centers ultimately going to get built, what's happening with utilities. These are all things we're thinking about. So,
just on the quick one. On when you mentioned the restructuring of some of the businesses, are you seeing more divestments of all the facilities? Facilities are not ready for AI, therefore they're too old and being divested as single assets. Is there becoming more of the trends in the portfolios?
No, I wouldn't say so. Look, in reality, the cloud, and that's still a great business, like traditional cloud on CPUs, like those aren't moving anywhere, and those are incredibly sticky. Where you could see divestments is to the extent a business change their business model, and so maybe have legacy assets that are less relevant to what they're doing today. You could see some of that, but it's not of like whole, okay, now we're going to get rid of all these old facilities. We're not seeing that at all. These are good businesses, and actually they're all, across the board, and depending on the type of asset, it's an industry where you've got low churn, sticky customers, great customers, and you're making nice returns relative to other real estate asset classes. So those are good assets.
I don't think it's a very good business to be in.
Yeah.
But Alex, so when we come here in 12 months' time for PTC'26, what's the one thing, what's your wish for the year that people will have done, will have sorted, achieved? What's the one thing that needs to happen in this sector?
Yeah, look, I think we need a little more, it all happens so fast. I'm hopeful within a year we're going to have a little more clarity on where this AI is going.
Yeah. Some use cases.
Yeah, and you'll see more use cases, but just having a better sense for how the hyperscalers, like, what their growth plans are, and how we can all kind of help support that, right? Because it has been from 0 to 1. I wouldn't say 0, but we were growing fast, and then it was just this rapid acceleration. And so I think we're all still kind of taking that all in, and just understanding how we can prudently all help businesses grow together, grow forward, and just having a little more kind of we're still going to have a lot of growth, but just a little more kind of clarity on where things are evolving to.
I think it's almost a bit of a step back, because what we were saying is very true. Microsoft just increased their capex by 300% from $20 to $80 billion.
Right.
That takes time for the brain to process, and not every business can grow their capex by 300%, let alone in the billions. So I do think you're right. We need to make some better sense of this. Maybe the next 12 months is all about that, really.
I think it might be. I think it might be.
Yeah.
Just rationalizing some of this a bit more, right?
Actually understanding what's happening. Alex Ramirez, Senior Managing Director for Guggenheim Partners. Thank you so much for talking to me. As for your home, thank you for watching, and do check our website and social media for the latest news about digital infrastructure from across the globe. Aditya Capital, you lead, we report. Bye for now.